Hello aspirants, today we are going to learn a new standard SA 450 and the title of the standard is Evaluation of Misstatements Identified During the Audit. So what are we going to learn in this standard? It's a super interesting standard. So the first thing is objectives of the auditor, and next is the definition of a misstatement and the definition of an uncorrected misstatement. Next, how auditor accumulate the identified misstatements. Then after accumulation, how did the auditor consider the identified misstatements? And next one is how to communicate to management and correction of the misstatements. Next, evaluation of the uncorrected misstatements, and finally communication with the TCWG, then taking a written presentation, and then final documentation. So these are the topics which we are going to cover in this standard. So first let me give the crux of this standard. So first auditor will identify misstatements and then he accumulate the misstatements, and first he will communicate to the management and he will ask the management to correct those misstatements. If management correct that misstatements, it's fine. If the management did not correct those misstatements, then auditor has to reevaluate the misstatements, and these uncorrected misstatements again he has to communicate to the TCWG. If TCWG corrects them, it's fine. If TCWG did not correct them, then he has to change his auditor opinion or whatever. So this is the crux of the standard. So the first thing, objectives of the auditor. So in the objectives of the auditor has to evaluate, he has to evaluate two things. First thing is he has to evaluate the effect of the identified misstatements on the audit. So first thing he has to evaluate that, and the second thing is he also has to evaluate the effect of uncorrected misstatements on the FS. So first thing is he has to evaluate all the identified misstatements, and in the second thing where he has to evaluate only the uncorrected misstatements. Next, definition. So the first definition which we are going to learn is a misstatement. So misstatement, it is a difference between the amount, classification, presentation or disclosure of a reported financial statement item versus how much it is required to be in accordance with the IFRS. So whatever is the difference between these two things is a misstatement, and it can arise either from fraud or error. And the second definition is the uncorrected misstatement. So in uncorrected misstatement, so auditor will accumulate all the misstatements during the audit and he will communicate with the management or TCWG, and whatever the misstatements which they are not corrected, those are called as uncorrected misstatements. Next, accumulation of identified misstatements. So during accumulation of misstatements, so auditor has to accumulate all the misstatements except those misstatements which are immaterial. And before evaluating those misstatements and before communicating to management or TCWG, first the auditor has to distinguish these misstatements into three types. The first one is factual misstatement, second is judgmental misstatement, and third one is projected misstatement. So factual misstatement, these are clear misstatements and there is no doubt regarding that. And the judgmental misstatements, so these are like a difference between accounting estimates used by the management but auditor thinks these are not reasonable, like scenario 1. On the scenario 2, like accounting policies applied by the management but auditor thinks these are not suitable for that area. So these are called judgmental misstatements. And projected misstatements are like, these are auditors projection over the total population based on the misstatements identified from the samples. So like if there are 10 samples he tested and out of that he got 2 misstatements, and he will project it to the 100 population. So if you have 2 misstatements in 10 population, and there will be 20 misstatements in 100 population, so based on that he will project the misstatements. So these are the projected misstatements. Next, consideration of identified misstatements as the audit progress. So in this step, the auditor, what he has to do is, so whatever the misstatements identified, he has to accumulate those, and after accumulated, if it is less than materiality, then auditor no need to revise the overall audit strategy or audit plan. And but if these misstatements are more than materiality, then auditor has to determine like whether he wants to revise the overall audit strategy or audit plan. And in second scenario, if the nature of the misstatements or the circumstances of the misstatements occurrence like indicate that there are some other misstatements, so then whatever the misstatements which were previously accumulated plus whatever the other misstatements identified here, so if you aggregate those two things and if it is more than materiality, then also auditor has to determine whether he wants to revise the overall audit strategy or audit plan. Next, communication to the management and asking them to correct the misstatements. So here first auditor has to do is like, first he has to communicate all the accumulated misstatements in timely manner to the appropriate level of management. So first thing he has to do is the communication. Second is he has to request the management to correct those misstatements. So first he communicated, now he's requesting the management to correct them. Here there may be two scenarios. First scenario is like management agrees for the correction. So in that scenario, auditor has to perform additional audit procedures, so that if after correction also maybe there may be some other misstatements which may remain, so he wants to check that, so he will do some other audit procedures. And in the second scenario, if management refuses to correct the misstatements, so now auditor has no other option, he has to understand the reasons behind the management. So after understanding that, he has to apply that understanding to the FS to check whether the uncorrected misstatements or material or not on the FS. Next, evaluating the effect of uncorrected misstatements. So we communicated with the management, management corrected some misstatements and management did not correct some misstatements. So now we are evaluating the effect of those uncorrected misstatements. So first, before directly jumping into evaluation, first we have to reassess the materiality, like still the materiality is like appropriate or not, we have to recheck it. Then once we are okay with that materiality, then we have to jump into evaluation. So during evaluation, the auditor's main objective is like whether these uncorrected misstatements are material or not. So here he has to check the current year uncorrected misstatements, and if there are any previous year uncorrected misstatements, he has to check both. So in the first scenario, auditor has to consider what is the size, nature of those misstatements, and the circumstances of the occurrence. So he will check for those for the current year misstatements, and he also has to check the effect of the uncorrected misstatements from the prior periods. So he has to evaluate all these things. Next, auditor has to communicate with the TCWG. So general question, like people will think that we already have communicated with the management, and why again we are communicating with TCWG is like management is a body which manages day-to-day activities of the organization, but TCWG is a body which oversees the management. So TCWG is a independent, it has independent members, so it is like a higher body. So after if management refuses, so we have to communicate with the TCWG. So here, see, the first thing is we have to communicate the uncorrected misstatements to the TCWG and tell them the impact of these uncorrected misstatements on our auditor's opinion, and we will ask them to correct it. And also we have to communicate the effect of prior period uncorrected misstatements and what is the effect of them on the FS. So these things we will communicate, and we will ask the TCWG to correct them. If they correct it, well and good. If they are also saying we are not going to correct them, then we have to modify our opinion, or we have to document the reasons of their not why they are not correcting them. Next, written representation. So auditor has to request a written representation from management regarding that. If the management or TCWG believes that the effect of uncorrected misstatements are immaterial, then auditor has to take a written representation from them, and he also has to attach a summary of the uncorrected misstatements to that written representation. Next is the documentation. So in documentation, auditor has to document three things. First thing is what is the amount below which auditor thinks these misstatements are immaterial. So that amount auditor has to document. And the second thing is whatever the misstatements accumulated and whether they have been corrected or not, he has to document that. And the third thing is if auditor thinks that the effect of the uncorrected misstatements are material, then he has to document what is the basis for that conclusion. So auditor has to document all these three things. So with this standard is completed. If you like this standard, please like, share and subscribe. Thank you.